Welcome to All About Money on HKIBC. I'm Chloe Feng. Hong Kong has finally shed its last major COVID restriction, dropping the mask mandate after being in place for nearly 1,000 days. A farewell to the COVID era. Looking ahead, the financial secretary expects the city's economy to significantly rebound, forecasting up to 5.5% growth for this year. However, there still remains the reality of the large fiscal deficit the city needs to plug, while tourism and services recovery remain sluggish. So how can the city strike the balance going forward, and what are the major challenges along the way? Gary Ng, senior economist at Natixis Corporate and Investment Bank, joins us today to break down the budget and share his thoughts. So Gary, welcome to the show. Thank you for taking the interview with us.
It's my pleasure to be here all the time.
And finally, the mask mandates have been dropped. And what do you feel about the new reality now?
Well, I think it is really marking end of the era of the COVID restriction that Hong Kong has been, placing for the past 3 years. And of course, I don't expect this to immediately have a strong boost to consumer sentiment. But still, I think it shows that, Hong Kong should or is going to step out of this COVID nightmare, and things should start normalizing at a quicker pace.
Were you wearing masks after the drop of the mask mandate?
Well, I didn't, but of course, I think it's good to give back basically the people the choice of whether they want to wear or not, which is probably a sensible economic decision.
Yeah. Actually, for me, I was still wearing the mask when I'm on the public transport, thinking it's still a way to, for the self-protection as well, because I haven't got COVID in the past 3 years. But anyways, like after the drop of the mask mandate, actually, there are some good news for certain industries, for example, the services or the tourism industry. But then for some industries, there's a kind of looming sentiment as well. For example, for the mask manufacturers in the city, do you think there will be still room for this industry to survive in the post-COVID era?
Sure, of course, I think speaking of the winners, definitely retail, catering services, hospitality, airlines, and even insurance companies will, see a massive boost to their sales because they're pretty much rebounding from the bottom. But of course, when we talk about some of the winners in the past, which basically means the mask manufacturers that you mentioned, I think it is really a twilight for some of these big sales that they may have in the past. Simply because I think even though there could be some demand from people in using masks for different purposes, rather it's short-term or for medical purposes in the future, still it's not comparable to the demand driven by government policy that that everyone really needs to wear one every day. So therefore, I think my take is that it's quite likely that we will see the end of many companies in the next few months. However, if we are lucky, then we may have one or two survivors which manage to hold this supply chain, the technology they can supply to the basically different medical organization in Hong Kong, and even increasingly export to the world, right? Because it has really basically attained many qualifications internationally. So it's actually, I think, quite a good element in the Hong Kong economy, and especially as the world increasingly focuses on supply chain security. And I think this medical resources is definitely one of the important component that many governments may have in mind.
And also, speaking of the all COVID-induced industries, do you think there will be also a kind of a huge reshuffle in different sectors in the city as well? And how will this kind of reshuffle before COVID and after COVID bring an impact to the city's economy?
Sure. I think generally speaking, I still think Hong Kong will be quite reliant on finance, on logistics. This strong pillar will not change so much. But of course, within some of these sectors, there may be some changes because people's behavior or consumers' behavior may actually change because of what happened in the past 3 years. For example, nowadays, I think people would tend to focus more on living quality, which also means that there could be a change in the catering services supply because of the changing demand, right? Because people may buy more goods for consuming at home. They may buy more, home appliances because they want to build they would stay more, spend more time at home, etc. So I think there could be some kind of this divergence or changes within the sectors itself. But I think from the general point of view, I think finance finance, logistics, and retail tourism, those are still the strong pillars that Hong Kong would rely in, especially even if we talk about manufacturing, it's only 1% of GDP, right. So it's not going to make a very big difference immediately.
Got it. And also speaking of the tourism industry, for example, that Hong Kong is now really pushing forward to regain this kind of momentum. But it seems that it only accounted for about 5% of our GDP in total, even at good times. So do you think even this 5% is still very important for us to regain this momentum? What kind of significance from this sector?
Sure, I think the significance of tourism is really not only about tourism, but really about this synergies and the ecosystem that it managed to build together with other industry. For example, there could be different purposes of tourism. It could be business, it could be leisure, but often it would mean the spillover demand in, for example, a financial conference, which managed to facilitate even further collaboration in many other sectors, or even for retail industry, it's actually quite an important component in the labor market, even though if we look at it from the GDP, which is the value-added perspective, it may not be that huge. So therefore, I think it's still quite an important industry, especially as Hong Kong is a small and open economy. I mean, the comparative advantage is really to have all this free flow of capital, talent, and people. So this is really what we were missing in the past few years. So I think now it is really the right time to actually get back that momentum and basically chase other competitors in the region.
Right, but so far it seems that recovery remains a bit like sluggish, not as strong as we expected, isn't it?
Yeah, yes, exactly. Because I think first it takes time, and second, I do think that Hong Kong's image around the world has been damaged quite severely in the past 3 years, simply because of the divergence of the COVID policy.
Right.
So it would take time for people to actually know or understand that Hong Kong is trying to reopen and back to the pre-pandemic era. And I think the third point is really about there's a lot of bottlenecks in terms of trying to streamline the whole reopening process. For example, if you even look at the amount of planes flying into and out of Hong Kong, often it is like constrained by the amount of a pilot, flight attendants.
Manpower issues.
Yes, exactly. And even like for the maintenance of different planes, it would take time to actually bring them back from the desert in Australia back to Hong Kong. And even, there's also some talks about the cross-border coaches from mainland to Hong Kong. So I think all of this takes time to be solved, and then I think it will get better, but the speed may not be as quick as many may have expected.
And now, after mask mandate being the last symbol of the city's COVID restrictions being scrapped as well, apparently, the more are arguing that the city should have a better economic recovery for this year. And for Financial Secretary Po Chen, he also signaled that Hong Kong's economy will significantly rebound from this year. Although Hong Kong's economy shrank 3.5% last year, marking the third contraction in 4 years, he then forecasted the city's GDP will grow by 3.5% to 5.5%. That's a huge improvement. Do you think he's being over-optimistic?
Well, yes, indeed. I share the view that he's a bit too optimistic in a lot of analyzing the future economic prospect of Hong Kong. The first is, of course, I totally agree with him from the way that mainland China is reopening, which will bring more tourists to Hong Kong, and as Hong Kong reopen and normalize, the domestic demand should improve. However, I think we also cannot forget that there are a few challenges that Hong Kong is facing right now, because global central banks are still hiking interest rate, and for Hong Kong, the interest rate will pretty much be linked to the Fed, which was unavoidably will hike as well. So that high interest rate environment will actually hurt consumer sentiment, as people will need to pay more for their mortgage, and increasingly also we need to think of the inflation pressure in Hong Kong, because as the world actually about to see slower but still high inflation, Hong Kong will actually see an uptick in inflation this year because of the high energy and also transportation prices. And even though I think if demand improves, the rental cost in Hong Kong will also increase as well. So all of this seems to counteract a bit towards the positive side from China's reopening. So therefore, I still think that, well, Hong Kong will rebound at quite a significant level, but still it may not reach the target the government may have in mind.
Oh, all right. And I mean, Financial Secretary also himself also warned about the inflationary pressure, forecasting at, if I remember correctly, 2.7% underlying inflation data for this year. But you think it may not be able to achieve this goal, then what is your forecast for Hong Kong's economic growth for this year?
Sure, because of this type of pressure, especially for inflation, I think we will really see in certain months that it could reach 2.7%, which I think Hong Kong residents haven't really seen this fast growth in the past.
So electricity prices already surge a lot.
Yes, exactly, and even the transportation and energy price, and if the government actually fade out certain subsidies in the second half of the year, I think it can actually go a bit higher as well. So I think it's more sensible that Hong Kong's economy will grow at a range of 3 to 4%, which is still a strong rebound. However, it's still lacking a lot of regional peers at quite a large pace, simply because even though Hong Kong grew at 4% this year, it will only be just about the 2019 level, and some of our peers, they are already 6 to 10% above that level.
All right, thank you very much for your thoughts, Gary. We'll take a short break for now, but coming up next, we'll have more discussions over Hong Kong's economic outlook, so do stay tuned. Welcome back to All About Money on HKIBC. I'm Chloe Fong. Joining us today is Mr. Gary Ng, Senior Economist at Natixis Corporate and Investment Bank. We're talking about Hong Kong's economic outlook in 2023. So Gary, thank you for joining us. The FS also tried to, issued more of the infrastructure bonds to ease the cash flow issue. What do you make of this move on the issuance of infrastructure bond to ease the deficit situation?
Sure. So if we first look at the deficit, indeed, it has been quite a worrisome signal because there's basically a 7.3% of GDP deficit last year, and for this year we will also see a 4.5% deficit if we exclude any bond issuance that government may have. So it means that the fiscal reserve may continue to fall in the next 1 or 2 years. And I think one of the ways the government would have in mind is, of course, trying to issue more bonds. But I think it's not that bad to actually have more debt on the government book. And the real question is really how do you use those money? Because if it actually generates a faster growth and basically enhance the economic prospect of Hong Kong, then eventually it's actually a positive cycle to invest further in the economy from the government. So I think the focus will be on how they actually invest and then basically how it would contribute to the economy. For the infrastructure bonds, it also depends on how they want to issue it, because there's 2 ways of doing so. The first is, of course, you put it on the government book. The second, you can use the off-balance sheet vehicle. For example, you can think of the airport authority may actually can issue their own bonds and then finance their own projects. Of course, it's still government owned. So there's many ways that it can be done. I don't think it will hurt the credit rating and then the general funding cost of Hong Kong, but I would look further into how the government wants to spend this money.
All right, but on the other hand, some are saying that, for example, the issuance of infrastructure bond, then we are facing the high interest rates. And are you worried about this aspect?
Well, indeed, yes. I think the high interest rate has indeed been quite a strong pressure, not only for Hong Kong, but in many other governments around Asia, especially if they rely more on bond issuance to fund many of these projects. So right now, it may not be the right timing, but also depends on how urgent these projects may be. If it actually can bring a very huge benefit, it should be done as urgent as possible. I think it's unavoidable the government will need to do it right now, given the fiscal situation that we have. However, I think otherwise, waiting a few years until the rate actually go down a little bit may be another option.
Yeah, stabilize more. Speaking of the trade issue, we just have the data this week signaling that the city's exports and imports both registered a significant decline. And for exports, it logged the largest drop in 7 decades. How worried are you when it comes to the the city's trade age situation with the sluggish demand overseas?
Well, indeed, I think in the past 2 years, global demand has been rather resilient for Hong Kong, simply because first, if we look at the trade data, everything has got expensive. So naturally, even if people do not buy as much as before, then at least on the headline figure, it shows a stronger growth. But I think what we are facing right now is really the global issue that interest rate may last longer and stay higher. So that will have an impact of the consumer electronics demand in Europe, in the US, etc. And even though there could be a rebound from mainland China, because Hong Kong is really a core of this trade of the supply chain, it would such pressure would, such positive catalysts may not be able to offset like the falling global demand. And especially if we look at the tax cycle, this time around, compared to the past, a lot of firms has accumulated more inventories, which is the aftermath of the COVID pandemic, because in the last 2 years, it's about supply. But now the worry is on demand, which is, I think, a key change that we have this year. So I think it's quite likely that Hong Kong's trade performance may still stay quite weak in the first half of the year. And then hopefully things would get a bit better in the second half, because this destocking cycle may be gone, and then there will be some rebound momentum in the tech sector. And especially for Hong Kong, electronics is really a key export and re-export component.
You talk about the tech sector. We can talk more about that later on. But before that, I also want to know your thoughts on the city's deficit situation. Financial Secretary believed Hong Kong's fiscal situation will improve from next year. This year we'll still see the reserves in red, but from next year we will probably see some surplus if the economy is growing on the right track. And he also forecasted the fiscal reserves will gradually rise to nearly $1,000 billion. Exactly is to be the $987 billion by the end of March in 2028. How would you rate our current fiscal situation? I mean, are you very worried about the situation right now in terms of the debt and borrowing? And do you think we are able to achieve this kind of forecasted figure as we move forward?
Sure. I think it depends on how we define what is worrisome from that perspective. So of course, compared to many other governments around the world, Hong Kong still have a massive capacity to borrow, because the debt from the government is simply very low. However, whether Hong Kong can actually achieve like a consecutive years of fiscal surplus as in the past, or the size may be as huge as the past, I think that may be a bit questionable. Because I think from what we see from the fiscal, basically the budget, is that Hong Kong is trying to bet on the rebound of growth to actually fuel the expenditure. But the expenditure will only rise further because of the infrastructure spending, because of the structural problem in aging population. If the government wants to solve the home problem, then they will need to build more homes. All of this basically needs money. So eventually, I think Hong Kong may actually enter a situation that the growth may gradually decelerate, which will, of course, impact like personal salary tax, corporate tax, and even land sales if the real estate market doesn't rebound as quickly as the government have in mind. And on the other hand, because of all this growing expenditure on welfare, etc., I think it's unavoidable that the government may need to basically consider some changes in the tax rate sometime in the future, and also issue more bonds to fund this type of expense, which is already the case in Singapore, because I think both cities kind of face a similar dilemma in a certain way. But I think eventually Hong Kong will need to consider some changes in the tax regime.
Widen the tax base or something to increase our revenue. Also, speaking of from the budget's vision, then the city is also aiming to be transformed into an innovation and technology hub. For example, on the semiconductor site, there is a vision that we are going to build a microelectronic research and development institute in the Yuanlong Inno Park next year as part of the effort to transform the city to gain the high-edge, top-notch technology in this kind of global race. But how would you rate this kind of vision? Do you think Hong Kong is in the right position of among all of those competitors? And what kind of role will Hong Kong be playing between, for example, China and the Western world?
Sure. I think for Hong Kong, it has been quite a good semiconductor trade hub. But it doesn't really produce anything, because if we look at it, the performance in the past 10 years, the share of semiconductor-related exports in Hong Kong has increased from 16% in 2012 to right now 36% in 2022. So definitely it's quite an important component of the Hong Kong economy. So now the question is whether the government-driven R&D projects can actually enhance Hong Kong to actually produce something and actually compete with the world. And as far as I know, the government is trying to focus on the so-called third generation semiconductor chips, which basically is a component that may be quite different from the traditional silicon, like the large chips that are produced from, for example, Korea and Taiwan, which focus a bit more on the new industry that many people may have think of, such as solar panels, wind energy, electric vehicles. So I think Hong Kong does have a chance of enhancing the R&D ability by gathering different talents to actually produce from the research basis. However, talking about production, I still think Hong Kong doesn't really have that physical infrastructure to enhance the whole production line to happen. And especially if we look at the third generation semiconductor, the leaders are really US and China. So definitely Hong Kong will be somehow caught in the crossfire of this geopolitical current. And I think in the past it's quite easy for Hong Kong to be a hub to actually gather the expert from US and China, but increasingly we see a lot of different sanctions or ban from the US from
export control still ongoing.
Yes, exactly. So, and even today there's rumors about whether US funds will be allowed to invest in this type of funds. So increasingly, I think it will be difficult for Hong Kong. It's not a bad start, and I think as long as Hong Kong really have a certain technology that can be commercialized, then it's in a practical purpose, then it will be good for the economy. But this is not something that is traditional good for Hong Kong. So I think it's a good trial, but whether that will become a real growth driver in the future, we still need to wait and see.
So we're kind of like entering a testing ground now, and maybe we can aim to increase our R&D, and then after we get some innovations in this front, then maybe we can try to collaborate, for example, in the Greater Bay Area. What do you think about that?
Yes, exactly.
To increase the mass production chances.
Yes, exactly. I think this is really the government's policy direction in terms of facilitating this type of collaboration. But of course, even though Hong Kong doesn't manage to produce any of this, it could still adopt it to actually enhance its productivity. So I still think the direction is correct. The government knows the problem. Whether Hong Kong can produce it is questionable, but still I think increasingly we will see more involvement of this type of R&D or basically commercialized projects within the finance, logistics or different industry by itself, because I think it's key for the productivity and the efficiency in the future.
Maybe also an upgrade for our economy as well?
Yes, exactly. Even though manufacturing sector is likely to stay quite small, but still the upgrade of the economy will have a spillover effect, a positive one, into other sectors, which can actually enhance the growth, such as in fintech or even increasingly in other areas.
All right, the whole ecosystem will also be strengthened then. Thank you very much for your thoughts, Gary. Appreciate your time. And we'll be back on HKIBC next Sunday night. So until the next time, please have a good night.